Welcome back to another market closing live stream. Today we have Apple, Intel. These are going to be some big ones, and of course Amazon. Amazon's supposed to come out right at the bell, which should be entertaining. And Apple will come out at 1:30. They always take forever to come out, but they eventually come out. So we'll see what happens here. Obviously, we've got a little bit of a slowdown in the market today. Not super enjoyable. Seeing some of this red here, but investors are being, quote, bad moodish right now is what some are calling it. Yes, investors are just in a bad mood. There's no problem, Doomers. Everyone's just having a bad day, that's all. Alrighty, so with that said, let's take a peek here at what some of our good old stonks are doing into the close here. Take a look at this. You've got Tesla down essentially 3% here, 2.9. Pretty much every kind of stock. Any stock that ends in "ok" is going down. Microsoft, look at that plummet right there into the close, down almost 6%. Nvidia, you've got profit taking. On the Qs, you've got profit taking. Redfin's up 1%. Let's see here. Broadcom down 3.6. Hut 8 Mining down 12. Ulta Beauty down 1.7. Supermicro another 11%. After a crazy sell-off yesterday, now after its 10-for-1 split, down to $290. This is a stock that ran over $1,000 for a period of time, and then now it's basically at $290 when you split adjust. You've got Estee Lauder, beauty brand, down 21%. Etsy barely able to keep it up at 7%. Coinbase 15% plummet. Root, which basically memed up to around 150%, is still up about 67% at $67. But boy, it's come down literally 100%. I mean, this is kind of a crazy momentum play here. Then Uber down 9%, although rising into the close after being down much more than that. Palantir's under 42. Holy smokes. What a correction in markets today, huh? Look at this. Dell down 4%. Boy, you got a dip opportunity here all over the place to buy. I thought it was just going to be my coupon code expiring tomorrow, but damn, everything's on sale right now. Holy moly. Meta down 4%. eBay down 8%. Disney's actually up, and so is Ubiquiti and Enphase. Visa trickling down a little bit, and we got the closing bell. So let's get the bell, and then let's get the Amazon earnings.
Today, speaking of indigestion, because of these results and the drag on the major averages by Meta and Microsoft, we'll go red across the board, but we're ready because you got Amazon and Apple, of course, Intel, all studying those two with John Ford.
That bell marks the end of regulation. Cineverse bringing the...
That bell sounded like crap today. I don't know what happened, but it sounded like it was broken, like it was in a bad mood. Anyway, Amazon was down as much as 3.3% today. Pretty remarkable. It's actually now below its 2021 COVID peak. How crazy is that? Amazon earnings are on deck after it is down 3.39%. So let's go ahead and see what happens. They should be out just about, frankly, any moment now, so we'll be covering this. Then we'll be watching Intel. We'll be watching as well what's going on with Apple. Let's see. What else can we pull up while we wait for Amazon? Oh, I see a green candlestick. It's a beat from Amazon. Amazon Q3 net sales come in at 158.9 versus 157.29 expected. That looks like it is a net sales beat. Oh, and then the estimate for Q4 sales, 188.5 plus 181.5. Let me see. Hold on a second here. 370 divided by 2. 185. Ooh, the forecast actually misses. Q4 misses the forecast. So let's write that down. What do we got here? Then we've got, okay, so Q4 net sales guide misses by not much. 185 divided by 186.36. Misses by about 80 basis points. So not terrible in terms of a guide miss there. As far as Q3 operating margin, you had an 11% margin versus the 9.34% expected. That's pretty good. Then you had AWS, which their sales margin actually came in a little bit lower than expected, at 19% versus the 19.2 expected. Or sorry, that's their net sales rather, not margin. Net sales coming in a little slower. So Q3 AWS 19% growth versus 19.2% expected. And that's not bad. Q4 net sales we saw missed a little bit. Q4 net income is expected at a midpoint to be 18 mil. That's actually better than expected. 18 bill rather. 18 bill midpoint guide on net income. The expectation was 17.49 billion. So that's a beat on Amazon with operating income guide. Slight smidgen of a miss on net sales going forward. And then EPS for Q3 also beats really nicely. So let's take a look at this here. Stock's up about 4.9%. Q3 Amazon EPS comes in at $1.43 versus the $1.16 expected. That's a pretty nice beat right there. That is a beat of about 23% EPS beat. That's really good. So great job. Then it looks like you've got Intel surging right now. Intel up as much as 11% as Intel earnings come out. Wow. Okay. Q3 revenue beats with 13.28 billion versus 13.02 expected. Q4 revenue expected to be higher as well, 13.8. So I'll write that down. 13.8 bill guide rev versus 13.63 bill expected. So that's a beat. And then you have Q4 adjusted EPS. Adjusted EPS for Intel expected to be, let's see here, 12 cents versus 6.3 cents expected. Pretty good number there on Intel. Let's see, intends to keep the company together. Okay, let's write that down. Intends to keep company together. Let's see, most going green here in after hours. Obviously, Amazon coming up. NVIDIA is also popping up a little bit here. Remember, Q3 numbers, these are really going to be your ending September numbers, but that guide at Amazon's still decent. The net sales guide did miss by 80 basis points, but market's taking it in stride because that bottom line's expected to be better. Let's see what commentary they give us. So this is, what else do we have from Amazon? Net sales EPS. Physical stores, North America net sales. I mean, this is all pretty in line. And then let's see here. Intel took steps to reduce inventory in PC processors. Let's see here. Okay, data center AI revenue. Here we go. That's what everybody wants to hear about. So what is this? Data center AI revenue coming in at 3.35 billion versus the 3.15 billion expected. So you had a little bit of a move up there. Not bad. So that's good. Let's see what else we have. Hold on. Hold on one second. There we go. Sorry. Okay. Let me get Apple just on deck here so we have that handy. Apple comes out at about 30 minutes after. We looked at Intel and Amazon, both really good beats here. I wonder if the Amazon move is going to pick Etsy up with it, because Etsy was a good run this morning. Etsy was up 7%. It's up about 80 basis points now. So, okay, that's pretty good. Okay. And then, let's see. Okie dokie. Who else do we have? I think we have Avis coming out in just a moment. And then after we get Avis, who else do we have? We have US Steel. Avis misses. So let's write that down. I don't know who's paying attention to Avis, but for whomever is, Q3 rev misses at 3.48 billion versus 3.54 billion. And then we also have US Steel. Keep an eye on Amazon here. It's interesting. It's kind of having trouble holding on to that 5% already. We're going to go through their statement in just a moment as well as we wait for Apple. US Steel is not out yet. Okay, so we'll watch for that. Amazon. We've already gone through. And we're going to go through their doc itself, but I'm just going to see if there's any other news here. Nope. Okay. Let's go to the investor relations page. Amazon investor relations. Amazon. Earnings release. Got it. All right. Okay. One sec. Okay, there we go. Okay, there. All right, what do we got here? Amazon. Net sales increased 11%. Let's see here. Oh, we know that. Okay. North America segment sales increased 9% year over year. That's pretty good. Let's look at the actual, I want to see the tables too on this. Let's take a peek down here. Let's go. Okay, here's the guide. Net sales are expected to be between 181.5, 188.5, or to grow between 7 and 11% compared to the fourth quarter. This guidance anticipates an unfavorable impact of about 10 basis points of foreign exchange. Operating income expected to be between 16 to 18. Quarter assumes no additional restructurings or business acquisitions. Okay, interesting. So take a look at this. You've got a growth rate for Q4 expected to be 7 to 11%. And if we compare that to here, we're at about 9%, which is basically expecting the same stability, right? So I'll write that down. So guide for Q4 is 9% at midpoint. So basically stable at Amazon. It's pretty good. Okay, people keep spending. AWS increased 19%. Also pretty good. Operating income up, AWS up. Okay, free cash flow increased to 47 billion for the trailing 12. Wow. So if you look at that, let's see what's their market cap. Amazon stock. Amazon is it's about a $2 trillion company. So if I take 2 trillion and I just divide it by, let's say that's 47.5. There we go. 47.5 billion, or rather the other way around. 47.5 divided by 2,000. I get about a cash flow yield, free cash flow yield of about 2.3%. So I'm going to write that down. Boom, diddy, boom. Boom. Free cash flow yield of about 2.3%. Free cash flow less principal repayments increased. 44, that's fine. Okay, as we get into holiday season, we're excited for what we have in store for our customers. We kicked off our holiday season with the biggest Prime Day sale, new Kindle lineup. Oh, that's true. They came up with the new Kindle. Kindle. So, you know, that might boost some sales for them. Huge Prime Day event, fine. AI shopping guides. Yeah, I've seen the AI sort of comment, like the review summarizer. That thing's kind of useful. I actually find it nice. Let's see here. Remove plastic air pillows from all delivery packaging at fulfillment centers globally, including expanding use of paper filler. Wow! You remember those little bubbly things that that are so fun to pop? They're getting rid of those, and they're just gonna give you the crappy paper. I mean, I get it, but darn. I kind of like popping those things. That's interesting. Yeah, I feel like I haven't seen those in a while. I gotta save some money. Go on paper. Okay. Oracle database at AWS for customers to easily and quickly migrate Oracle to get dedicated infrastructure. Launched our new memory compute optimized general purpose Amazon AWS Graviton 4 processor. Whatever. A lot of these things are just they get made by, you know, TSM or whatever else. Okay, what do we got here? I want to see this segment. Let's look at some margins here. Total net sales 143. Total operating expenses here. We bring operating income down of 11. Why did we... oh, I'm sorry. Okay, this is the new one right here on the right. So I'll paint the new one as green. There we go. I was going to say, how did operating income fall? There we go. That's better. All right. So operating income is actually up nice. I mean, that's a really nice move there. Okay. So let's see here. This is 17,411, 11,188. Wow, 55.6% increase in operating income. Op Inc. That's incredible, huh? That's wonderful. Okay, wow, I didn't know people were going to start spamming in the live stream section. These are totally bots. Well, that's all right. We're going to fix that really quickly. Hold on. There we go. That'll shut that up. So, okay. Let's see here. Then you've got, yeah, earnings. Really nice growth there in earnings. Good. Wonder if they give us any segment disclosures here. Okay, they do. Segment information. Okay. Here we go. Operating income. Let's look at this while we wait for Apple. Okay, operating income 5663 divided by 4307, up 31%. Increase in Op Inc. I mean, wow, that's actually really impressive because sales aren't up that high. So that is definitely an indication of some form of pricing power, right? 95537 divided by 87887. Yes, it's about 8.7% in actual sales growth. So that's pretty nice. Wow, international went positive. Let's go. Look at that. Yeah, it used to be negative all the time. Now it's positive in both. That's great. AWS, nice margin boost on operating income. That's really good too. Oh, this is fantastic. Cash, I mean, endless cash. Absolutely endless cash. You have current liabilities of $161 billion. So, you know, they keep their current assets roughly in line with that. I think that's mostly because they just blow the rest on expenses. So it's not like they're like such a, you know, strong balance sheet, but I mean, the cash flow generation of the company is such that it doesn't seem to be something folks really have to worry about. But yeah, you know, I guess you could always squander $50 billion a year in free cash flow. Okay. Very good. What about Milton? Oh, they're just talking about how they're helping launch new foundation models for their AI models. AI is going to be such a commodity. It's coming. All of it's going to be a commodity. All right, so what do we got here? Amazon's still holding on to roughly 5%. Intel's up about 13%, so not bad. Intel up, Amazon up, pretty decent so far. Now you're waiting about 14 minutes here for Apple, which is sort of leading up a little bit as you're waiting for the earnings to come out. Root drops a little bit there in post-market, but otherwise A lot of things turning pretty green in post-market. DJT was down 11% today. eBay down a little bit. Bitcoin was just under 70,000. Did just tick back up over 70,000 for just a moment there. So not bad. Okay. Now we wait for Apple, and we'll see what volatility we get out of Amazon here. All right. So let's save this. Okay. Next up, U.S. Steel. Q4. That's a miss on Q4 guide. Net sales beat, though, for Q3, so you got a little bit of a plus and minus there. And that's ticker X. Elon's got to buy that ticker. The stock's barely moving. Okay, next big one is going to be Apple, and that is still about 12 minutes away. And now we just wait. Okay. Andy Jassy kept prodding Alexa with sports questions. It was the summer of 2023. Wanted to see if the prototype voice assistant upgraded with AI was good enough to compete with GPT. And they wanted to integrate Alexa. Let's see. However, some of their AI made up the score. RIP. Oh, there's a whole piece in the Doomer world that's dedicated to Amazon's voice plans. Huh, okay. Oh, wow. Now U.S. Steel is popping. Like, I already saw the earnings a couple minutes ago. But it, all of a sudden, I guess, just had a buyer come in. Okay. Intel keeps moving. 14 and a bit now. And Amazon's struggling to hold on to 5%. So we'll see how that goes. Then obviously now we're just watching for Apple. So we are waiting for that. Let's see what other earnings we have. Let's go with, let's see. Happy Halloween, by the way, everyone. Well, let's go ahead and put the this one up. There we go. Yeah, we do have a price increase coming for the programs on building wealth over at meetkevin.com, so check those out. That'll hit 11:59 p.m. tomorrow. Been a while since we've done one. So U.S. Steel Q3 adjusted EBITDA comes in at 319 mil versus the 3027 mil expected, so that was a pretty nice beat. However, that Q4 number wasn't that great. Q4 EBITDA guide. Sees midpoint of 250 mil versus 268.8 mil expected. So a little bit of a miss there. All right. So that's U.S. Steel. Close that out. Amazon, we're now waiting for. Oh, I'm sorry, Apple, we're now waiting for. Intel reducing headcount by 16,000. Oh my gosh. All right. Let's write that down. Intel. Headcount to be reduced by 16,500. Taking a $3 billion of restructuring. And then, of course, you had the Q3 beat with the Q4 revenue guide beat. Pretty good. Okay. More layoffs. Not good for the economy. Okay. It does look like we actually have CEO here. Let's listen to them for a moment.
Fab construction project. We've been talking about CHIPS Act and whatnot. You know, the Republican candidate for president, Donald Trump, former president, was talking to Joe Rogan a few days ago and was not very complimentary of the CHIPS Act, calling it a waste of money, that tariffs would get the job done better of shifting incentive to produce chips in the United States. Will tariffs help produce more chips in the United States?
Well, overall, I'd say, first, the CHIPS Act was a bipartisan act. And, both Republicans and Democrats had strong support for it. We continue to see strong support from both sides of the aisle. I'd also say...
blah, blah, blah. If you're looking for something to diversify into, if you have a stock that ran a lot, or you feel like it's at the top, make sure to check out househack.com. We got that bond offering. There is a chance we're going to have to close that one sooner than expected. There's some unexpected things coming up that we think are great, and so stay tuned for that. But yeah, if you have questions, email us at ir@househack.com. Okay, let's see what else. Okay. Think we're looking at basically 7 minutes of sitting around until the Apple call comes out. Guess we'll keep listening here for a little bit. I'm surprised Amazon isn't actually able to hold on anymore. It did very well, but it's only at 4.5 now.
In addition to
Still
Amazon,
good.
we added 2 more 18A customers this quarter, compute-centric customers, so 3 additionally this quarter, and several more advanced packaging wins as well. So overall, a very good quarter for us on the foundry customers. But even better than that is we have a robust pipeline of activities, many other designs in flight, RFPs, and activities with others in the industry that are looking to also take advantage of 18A, advanced packaging, and the Intel resilient supply chain for their business.
Analyst Stacy Rasgon was on last hour. I know you guys love him over at Intel, but he was talking about expectations and where they were set when you came in. He's arguing that they were set too high, that you set expectations too high for what could get done. But do you feel they're set at the right place now based on these restructuring actions that you take in this quarter and based on where you say you are with Gaudi 3, 18A, et cetera?
Yeah, I feel like, we've gone through a very challenging period as we've restructured the company. I mean, the people actions, the restructuring actions, this is hard, John. But then to overachieve on our operational results this quarter, raise guidance for Q4, that says a lot to the team that we have here at Intel and our ability to perform in light of that. We feel like we're set up well, for the future. That's why we've taken these hard restructuring steps. We're also taking, the steps to make sure we have the balance sheet and the capital capacity, the capital efficiency to...
Yeah, this is another way of saying layoffs.
Product leadership, process leadership, launch us as a foundry, and really establish this role that Intel uniquely plays in the technology industry in the U.S. and in the global supply chains of the world. That's what we're out to do, and we're well on our way to accomplish exactly that.
Well, Pat, as always, I appreciate you joining me first on CNBC here. This time before the call, I worked out pretty well. It doesn't hurt that the stock is up 13%. Pat, I'll let you get on and prepare for the call. Appreciate it.
Thank you, John, as always.
Well, the final countdown is on. After the break, the earnings report that could set the tone for tomorrow's market and beyond, Apple's earnings numbers. Coming up next.
Yep. Let's go over here. Oh, there we go. Come on, Doomers.
Make chicken marsala or what the weather's going to be, as they start tinkering with that and trying to add new capabilities, they don't want to alienate the users they have by kind of gunking up the existing use cases. So that's a problem they have that some of these newer Gen AI tools don't have. So yes, they're having to kind of navigate this this area of expanding the capabilities of Alexa without messing up the capabilities it already has.
So it basically needs to build out a large language model separately, like on parallel tracks as what it's doing with Alexa. Has Alexa reached the limits of its capability then?
I don't know. I mean, they've always wanted Alexa to have more capabilities and potentially have more capabilities. it's just nobody wanted to use them. You know what I mean? Like they wanted people to use it to shop and add things to carts, and none of that really took off. So a lot of ways it was like a solution looking for a problem. So whether these things develop into actual solutions to actual problems remains to be seen.
All right, Spencer, really appreciate your joining us. Spencer Soper, a reporter there covering Amazon, of course, and he is the author of today's Big Take. In the meantime, we want to take you to today's top 3, where we name drop some of the people driving the day's talked about stories within the tech space. And first up,
Apple is out in 2 minutes.
he is a Ford executive. He is set to take over as Peloton CEO. And boy, news of his appointment has sent Peloton shares soaring.
You know what's fascinating about him is that not just is he a Ford previous alum, but he's also ex-Apple. And I think this is one of the things that are giving Peloton investors so much hope, because, you know, at Apple and even at Ford, he was in charge of things like consumer experience. And that's what you need at Peloton. You're going to need people to be engaged in those apps and, you know, using more of the services. I am looking at the Kim family, James Kim, the family of the tech titan Amcor, of course, in talks to buy a minority stake in the Eagles. I mean, the Philadelphia Eagles football team. Yes, I didn't want to say the city, but there you go. It is the Philadelphia Eagles. But that said, it's still a fantastic football team, and it's just amazing. You know.
We'll listen to this in the meantime about the Apple iPhone here for the next minute.
Just share your thoughts with us on how the new iPhone is doing, what you're seeing just in terms of sales relative to the same kind of thing from last year with a new product.
Hey, John. Yes. So we're just like in the very early innings of getting feedback from the market on how the iPhone is doing. As we were expecting so far, the feedback we get is pretty
Keep going.
pretty negative. We already hear about weak consumer reception, and Apple poking on cutting orders with their supply chain, but it's still very early. What we expect usually is like late November and early December, that news flow to accelerate and more evidence of that coming. And of course, if Apple has to make like a significant adjustment to its supply chain, it's going to become very tangible and material in the first weeks of January. But so far,
this is that Pierre guy who's also on the Tesla reports often.
Now reversing with Chinese manufacturing coming back into the higher end of the market. What you see is like a consumer demand across the world. You just mentioned like the demand in the auto industry being very weak. So you don't have a lot.
All right, well, maybe expectations are low for Apple, then it'll smash them. It's usually always the opposite of what you think. So here we go. Okay, Apple comes in with iPad revenue. iPad revenue missed a little bit. Apple products revenue actually beat by quite a bit, 69.96 versus 69.15. Total operating expenses were lower, which is good. That's a beat. Mac revenue as expected. iPhone revenue comes in at a beat. I mean, these are good numbers so far. iPhone revenue comes in at 46.22 versus 45 expected. That's pretty good. Wearables miss a little bit. Active install base all-time high. I mean, this is good. And then Q4 revenue beat. I mean, overall, these are good numbers here. Declared cash dividend of 25 cents. Let's see here. Let's write some of this down. Overall, I think this is pretty good. So Q4, they don't give guide that I see here, but Q4, which ends in September, iPhone rev comes in at 46.22 bill, which is a beat of 46.22 divided by 45.04. It's a 2.6% beat. So that's pretty good. 25-cent cash div, which is pretty good. Then you've got China misses. Q4 China misses at 15.03 billion. That's not a surprise. That misses by about 4.8% for China, but again, that's just China. Q4 revenue beats at 93 billion 94.93 divided by 94.36. Beats by about 60 basis points. 60 BP beat. And then services revenue missed. Q4, so that's the higher margin side. Q4 service rev misses 24.97 billion. That is a miss of 1.19%. Okay. Wearables, Q4 wearables miss at 9.04 bill. The estimate was 9.17, so it misses by about 1.4%. That's pretty nominal. iPad rev, Q4 iPad rev, slight miss at 6.95 billion. 6.95 divided by 7.07. It's about a 1.7% miss. Then products rev, Q4 products at 69. $69 billion. 69.96 divided by 69. 69.15 puts me at about a 1.1% beat. So I think that's pretty good overall, honestly. Let's see here. Let's go to the actual statement. I don't know why the stocks don't like it, but stock is down about 1.8 right now. Apple, investor relations. So, let's see here. Apple. Why do they make it hard? Q3 presser. Nope, that's August. The Q4's not. They don't want to give it to me. Oh, there it is. Make it a little tricky to see, huh? All right, well, here are the financials. Let's see. Usually Apple does not give any guidance. So it's usually pretty simple to look at here, what we've got going on. But let's see here. Let's see why people are complaining about this, because it actually doesn't seem that bad. It seems pretty good to me. All right, 43,879 divided by 94,930. That gives me a 46.2% gross margin. That's great. Wow, that's actually fantastic. I like that. 46.2% margin. That's gross. And then operating margin is 29,591, which is 31.1%. Not as good as Microsoft, but it's pretty good. Op margin. So, big fan of that. Why are earnings per share lower? Oh, taxes. Okay, fine. So that taxes hit EPS, but that's okay. Look past that. You gotta pay your taxes. What's with this services sector? Look at that. That might be why the stock's down a little bit. It's perfectly flat. Oh, that's cost of sales, though. No, that would be a good thing then. Yeah, see, I don't really understand why it's down, honestly. I think the numbers are good. Yeah, no, if anything, that means margin went up. Yeah, no, that's good. Because look, you've got, what was the growth you had here? 24972 divided by 22314, right? And then what do you have? 11.9%. 11.9% growth year over year with flat expenses. That's great. That's really good. Yeah, a big fan here. R&D and SG&A. Let's see what some of these were up. Your overall growth, by the way, in products was up. What do we got here? 69,958 divided by 67184. 4% growth. It's a little slow headline, right? 4% growth headline for products. And then R&D and SG&A grew. Well, I'll just do OPEX. 14,288 divided by, oops. 13,458. 6%. So 6% year-over-year OPEX growth. Celebration, it's 1337. There we go. Huh. It's a pretty good report. Term debt, total liabilities, non-current, we've got 131 billies. Bills to pay, I've got like 166. And we've got 152 total current assets. So a little bit of management, and that'll be okay. Nothing scary, but it's not like these floods of cash that they used to have. And then look at the growth in the segments. Let's see here. Growth in the segments. 46,222 divided by 43,805. That gives me 5.5% iPhone growth. So, I mean, the sucker's still selling. You know, it's easy to make fun of it, but it's selling. Mac, 7744 divided by 7614. 1.7%. I've got iPad at 6950 divided by 6443. 7.8% growth on iPad. That's pretty good, too. And then wearables are the only negative here at -3%. With services, we already I think we already ran this, but I'll do it really quickly again. 11.9% service growth. And that's pretty good. I like this. Somebody here says Apple had buybacks last earnings report. Oh. Maybe. Yeah, that is interesting. I mean, like, think about it. The stock is at highs. Why do you want to buy it back now? I'll write that down. Maybe down slightly due to no more buybacks, although stock is at highs. So it kind of makes sense to preserve cash and not buy it back. I don't know, it's kind of weird. Why would you want them to buy it back at this point? But then again, everybody just wants their stock to go up, so I get it. All right, let's save that, and then let's see what we got, how the market's reacting. It's only down 1%. I mean, honestly, if you're going to be down for earnings and you're only down 1%, who cares? That's not a big deal. Okay, so let's take a peek here. We're at about 1%. Yeah, you're trying to recover here on Apple. Okay, Intel can't really hold above that 2387 line. Amazon's trading sideways here. Tesla's back to slightly negative. Q's up 17 basis points. Yields are down a little. I think they may have peaked out, honestly, which is good. And Bitcoin's bobbing around 70K. Volatility index is also up quite a bit. You're now at 23 again. Wonder how greed and fear is doing. Greed and fear. Oh, you fell a little bit into fear today. How crazy. Look at this. Oh. If this is already fear, what's extreme fear look like? Jeez. Still got some categories of greed going on, though. All right. Very well. Well, that gives you about 10% on Intel, Negative about 1.3 on Apple. Nvidia is sitting at about a third up in after hours, and Amazon's at about 4.3. So there you have it. Thanks so much for being here for earnings, and have a wonderful Halloween. If you got any questions on those courses on building your wealth, send us an email at staff@meetkevin.com. If you have questions about House Hack, email ir@househack.com. Might end that offering sooner than expected. So email us again if you have questions at ir@househack.com. Otherwise, get your DocuSign done over at househack.com. And then we will reach out to you and work with you on getting the rest of your paperwork in and helping you wrap all that stuff up. And then you can start earning some yield if you want to. And that's all I got. Thanks for being here, folks. Good luck, everyone. Goodbye. Coupon expires tomorrow at meetkevin.com. Goodbye.